In this three-part series, we will answer the three important questions as you start to create your own retirement plan. Where are you now? Where do you want to go? And how are you going to get there? So in this first video, we will talk about where are you now and look at some vital statistics that you should start to create and collect on your own. So stick around. Hi, I'm Scott. I was a college professor for many years, and now I teach couples like you that are close to retirement how to clarify your goals, master your money, and achieve confidence as you move into the next chapter. Let's get started. Now, financial planning has 6 distinct areas that we often refer to. And so I'm going to use this as my framework to recommend a total of 20 statistics that you should be aware of and or collect as you start to put together your retirement plan. I relate this to a jigsaw puzzle. So if you dump out all the pieces, one of the first things you're going to do is get organized and identify the corner pieces and the edge pieces. So I think that's what step 1 about is, where are you now in terms of your financial status? So the 6 areas of financial planning that we will step through, and for each one I'll give you some statistics to collect, are your financial position, insurance, taxes, investments, estate planning, and the fun part, retirement planning. So get a pencil out, take some notes on this data that you're going to collect. Area number 1, your financial position. Now, the first number I want you to track down is how much do you spend each month on living expenses. Now, for some of you might already know that. Others, it's going to take a little detective work. So I want you to combine together your utilities, gasoline, insurance, groceries, entertainment, mortgage, all these different factors that you pay each and every month. How might you go about this? Well, some of you may have already started doing this, but otherwise, take a look at your bank statements and perhaps credit card statements for the last 3 to 6 months. You can look at gross numbers, large numbers, and say, in April for our Visa bill, the total was $4,000. And then you take a look at any kind of auto pays that are coming directly out of your checking account, add those in. Combine these two and find out how much are you spending in April and May and June and so forth for the last 6 months. You don't have to get too granular, if you want, but you don't need to. So that's your living expenses for 1 month. Item number 2, now I want to know what your cash reserves are, or what we often call your emergency fund. Now, I'm not interested in the number, whether it's $15,000 or $20,000 or $30,000 or $2,000. I want to know in terms of how many months of living expenses. You've probably heard that rule of thumb that you want to have emergency funds of 3 to 6 months of your living expenses. So let's find out where that is. You previously just calculated how much living expenses you have. Maybe it's $6,000 a month. And now you've got $20,000 in savings. Now, what do I mean by that? I mean that's money in your savings or in your checking or maybe a money market, high yield savings account. It's something that you have quick access to. You shouldn't have to sell bonds or stocks to get access to this emergency fund. Next item is a number you hear often referred to in the media called your net worth. Maybe you've calculated this and you can quickly go look it up, or maybe you haven't really taken the time to do this. Your net worth is going to be a list of all your assets on the left and all your liabilities on the right. The assets are what you own. Your home, the total of your 401ks, your IRAs, your savings account, part of your emergency fund would be in there. Maybe you own a cottage, whatever that happens to be, put that in the right-hand side, the value of that. On the left, your liabilities are things that you owe. And so this would be, for most of us, a mortgage, maybe some credit card debt, some education debt, some medical debt. Maybe it's a mortgage on that second home, whatever that happens to be. And then calculate the difference between the assets and the liabilities, and that's called your net worth. Now, why is this number important? Well, it's just referred to an awful lot in the media. So you'll see headlines that says, to be in the top 10% or to be in the top 30%, you should have this net worth. Or by age 30 or by age 40 or age 60, you should have this net worth. So it's a good number to have at your disposal. So that's item number 3. I'm going to call 3A, what is your liquid net worth? So of that total net worth, let's suppose it's $500,000, some of that is probably tied up in your home. Maybe that's $250,000 of that $500. Well, your liquid net worth is everything that you could sell quickly if needed to. Not that we're going to, but that you could. So we would include your home. And so in this scenario, if you got $500,000 net worth, $250,000 is tied into the value of your home, then that leaves you a liquid net worth of $250,000. So there we have the first three numbers related to financial position: your monthly living expenses, your emergency cash reserve in terms of months of living expenses, and then finally your net worth. All right, area number 2 is insurance. The first thing I want you to calculate is how much total life insurance do you have? Maybe you don't have any, and maybe at this stage in life, if you're getting close to retirement, you don't need any. That's fine, so that number will be 0. But if you do have some, whether it's term life that's going to expire in the next few years, or whole life that is not going to expire, but you've been paying premiums for years and years, put this into the total. So what are the total life insurance you have for him and for her? Secondly, take a look at your home and auto insurance. And what I'm curious about is your liability level. So liability is if you were found responsible for an accident, or if you were sued or have some other kind of responsibility, you might have to pay some money. Hopefully not, but you might. And so autos and home often have liability levels of maybe $250,000, maybe $500,000, just depends on your particular policy and what you chose to sign up for. But I'd like to know then, what is your level of protection from these rare occurrences of liability actions? Tied to that, do you have umbrella liability insurance? This is going to kick in above and beyond auto insurance. So let's suppose you're involved in some kind of accident and you are found to be at fault, and there are a total of $1 million in damages to other people's property and or mental health or physical health, and you've got a cap of $500,000 with your auto insurance. Umbrella insurance says above and beyond that, we're going to pay an additional $1 million, $2 million, $500,000 in liability. So this is called umbrella liability insurance because it covers above and beyond your homeowners and your auto. It's relatively cheap, and so if you've got net worths of $1 million or more, then you might want to consider umbrella insurance. And then finally, long-term care insurance. Do you have that? Probably not. Most people don't, but you've certainly heard of it. You understand the threat of, as we get older into our 70s and 80s, needing long-term care. So it's not that I'm proposing that you have long-term care insurance. I just want you to write it down or put a 0 if you don't have that. All right, area 3, one of my favorites, taxes. Yay! So I want to know, what is your gross income from last year? So you ought to be able to find all this information on your most recent tax returns, whether you do it yourself or have an outside firm do it for you. So what is your overall gross income? This is important to know, once again, for lots of data that you see in the media and lists that you see in the media. Calculations for your net worth should be some X value of your gross income would be a reason to be aware of this number. Now, in addition to that, I want to know, what is your marginal tax rate at the federal level? Now, marginal tax rate, as you know, we have a progressive system here in the US. So you might be in the 12% bracket, the 22% bracket, maybe even the 24% bracket. The more money you make, the higher tax bracket that you're in. But if you're in the 22% tax bracket, that doesn't mean that you pay 22% on all your money. As a married couple filing jointly, your first $30,000 or so isn't taxed at all. The next $30,000 or $40,000 is taxed at 10%, and so forth and so on. So your marginal tax rate, the way you're going to discover that is find out what is your taxable income for last year. So that's not your gross income, but that's going to be your gross income minus, generally for most of us, a standard deduction of about $30,000. So maybe that brings you down to $70,000 as taxable income. Now look that up on this form or on this table, and you will see whether or not you're in the 12%, 22%, 24% bracket. That is your marginal tax bracket. Reason that's important is as we look at taxable strategies to save you on taxes, we want to know if somehow we can reduce your taxable income by $10,000. Is that saving you 12% because you're currently in that marginal rate of 12%, or is it saving you 22% or 24%? So your marginal tax rate is how much are you being taxed on that next dollar that you earn. Slightly different is called your effective tax rate. Now this might be told to you on the cover page if you do your own taxes like I do on TurboTax, or if a CPA does them for you and gives you a cover page, they might tell you your effective tax rate. You can calculate that yourself by taking how much did you actually pay in taxes, maybe $7,200, divided by your gross income, and that's going to give you what's called your effective tax rate. So even though you might be at the marginal tax rate of 22%, your effective tax rate is always going to be lower than that. It might be as low as 12%, 14%, just sort of depends on your income and the amount of deduction that you have. So marginal tax rate, effective tax rate, and then what I like to calculate on my own just for insight is what is the total taxes that I pay. Not just federal, but I'm going to add to that my state income tax and my local income tax and my property taxes. All those combined gives me an overall number, which is generally pretty depressing, but I can calculate my own effective tax rate to all sources. All right, area number 4 is investments. Now this is also pretty much fun, and this is probably going to be one of the hardest numbers for you to track down. So I want to take a look at your overall portfolio, your IRAs, your 401ks, any brokerage accounts that you have, both for him and for her. And in there, you normally have a collection of mutual funds, maybe ETFs, maybe individual stocks. And I'd like to know, or I want you to know, what is the breakdown of all these different investment options in terms of stocks and bonds? Now, this is a number you often hear in the media, a 60-40 stock/bond portfolio, or 70-30 or 50-50. So this is just a big picture to understand what percentage of your investments are in stocks, which are considered a little more risky, but have the better chance for performance, versus what percentage are in fixed income or bonds, which have less chance of making money, but also less risky. So how are you going to do this? Well, pretty difficult to do on your own just looking at the statements, especially if you've got 3 or 4 different accounts and 20 or 30 different investments across all those. So I'd recommend that you go online and Google investment analysis tool or something similar. There's going to be some free ones out there. And what that allows you to do is to enter in all of your 5, 10, 20, 30 different investments, generally entering the 5-letter ticker symbol for mutual funds or 3 letters for an ETF typically. And it will do analysis and break down and create a nice little pie chart, sort of like this one, to show you what percentage are in stocks, US stocks, international stocks, bonds, short-term government bonds, all sorts of different kinds of assets. So buckle in to be able to track all those numbers down, but becomes pretty important. Now, while you're busy looking at all those investments, I also want you to pay attention to the management fees for each of these mutual funds and ETFs and other kinds of investments. They all have them. They all have management fees of some kind. They're all generally in the range of something very small, which would be 0.03%, 0.03%. So for every $1,000, you pay $3 in fees. They might go as high as 1%. So calculate across all those different investments what the total management fees are. So we're up to numbers 12 and 13 that we just did. What is your ratio of stocks versus bonds? And then what is your overall average management fees for each of your investments? Area number 5, estate planning. So this is what number 14 and 15 of the numbers that I'm recommending that you track down. Less total numbers, or those don't really deal with dollars so much. But estate planning is generally your wills in trust that determine what happens when you die, but more importantly, what happens if you become incapacitated. So you should really have powers of attorney, healthcare power of attorney, living wills, a variety of other legal documents that would really help out your spouse. But also in case of death, clearly you want typically a will or a trust, and you want beneficiaries for all of your accounts. So your retirement accounts, your bank accounts. Typically that's going to be your spouse as your primary beneficiary, and then whoever else might be your secondary beneficiaries. So the numbers I want you to track down first off is how many years has it been since you've updated your estate documents? Maybe you did this 15 years ago, so that number for you now is 15. Maybe you have never done them. So how many years has it been since you've updated your estate documents? Then I want you to take a look at all your different accounts, your checking, savings, your IRAs, your Roth IRAs, your brokerage accounts. All of these have the option for you to identify a beneficiary. These are called transfer on death accounts, TOD accounts. You might have to click on a few buttons, dig a little deeper to see who those beneficiaries are, your primary and your secondary, because maybe it's been a while, or maybe you set up an account and you just really didn't give it any thought at the time, and you'll discover that you don't have any beneficiaries. So your number for this category that I want you to write down is how many of these different accounts need to be updated. If they're all fine and dandy and everybody is the right primary beneficiary and second beneficiary, then you can put down 0 for that category. So area 6 is retirement planning. 5 additional numbers to bring us up to 20 for related to retirement planning. One is, what are going to be your future sources of income? So track down how much are you expected to get from Social Security at full age of retirement, age 67, age 70, age 62. If you haven't already, create an account with the Social Security Administration. You'll be able to generate a report that shows you all these projected numbers. Maybe you also have a pension coming from a prior employer or a current employer. Do a little investigation there to find out what will those income sources be. So that's a number, is what are your outside income sources during retirement. Secondly, I want to know how much are you currently saving. This is actually a pretty big number when it comes to parts 2 and parts 3. How much are you currently saving in retirement? Traditionally coming directly out of your paycheck at work. Be sure to include employer contributions. So maybe you're putting in 10 and they're putting in 5. Total would be 15%. So that's the number I'm looking for in this particular category, is what percentage of your current income are you currently contributing to retirement. And then finally, you would have already done this earlier on when we did the net worth, where you calculated all the totals of your IRAs and your Roth IRAs and your 403Bs and so forth. But in terms of retirement, I want to break that number down into 3 different totals. I want to know how much money do you have saved in pre-tax accounts, or also called tax-deferred accounts, IRAs, 401ks, 403Bs. What is that total number? What is the total number in tax-free accounts? Typically Roth IRAs, Roth 401ks, and don't forget health savings accounts. These are categories that when you retrieve money, they're not going to be taxed at all. So that's going to play an important role in tax planning during retirement. And the third category is what we call a taxable account or a brokerage account. So this just might be money that you have in savings or investments, not inside one of these 2 other what we call tax advantaged accounts. So 3 different buckets. I want to see the totals for each of those. Your tax deferred, your tax free, and your taxable account. So there are 20 numbers that you should track together, track down. Some are easier than others, that are going to help us answer the first question, where are you now? Now, if the second video has already dropped, you're going to see a link to it right here. If it hasn't yet dropped, please subscribe and you'll get notified in the next few days when part 2 does drop. Until then,